I want to talk about volatility in bear markets and why, as millennials, we should absolutely love them rather than be fearful. Right now, we've had some recent volatility in the markets, and you may have been reading some negative reports which could be scaring you. Don't be scared. This is the greatest opportunity we have. So what are bear markets and what is volatility? So volatility is simply how much the price of your investment fluctuates over time. And a bear market is defined as a drop in 20% from the peak price to the bottom price. Now, we as millennials have not experienced it for a long time. Some of you may have actually never experienced a bear market. The last one was in 2009 period, and the oldest millennial at that point was at 26. I was 23 at that point in time, and I was actually trading currencies and equities, and it was the greatest opportunity to build wealth that I had ever seen. A year later, Sarah and I actually started our first private wealth management company because we saw her as an opportunity to stand out from the crowd when everyone was being fearful and doing nothing. So let's go through some facts. Bear markets or corrections are going to be part of your investing life, whether it's in property, shares. It just happens in growth asset classes. In the US, from 1900 to 2014, there were 32 bear markets. Statistically, they occur about one every 3.5 years and lasted an average of 367 days. The most recent US bear market occurred in 2007 to 2009 when the stock market dropped 57% over 17 months. Fact number 2, while bull markets have often lasted for multi-year periods, a significant portion of the gains have typically occurred during the early months of a bull market rally. This is why you need to be investing even when you're scared. Like Buffett says, be greedy when others are fearful, or I like to call it the tuna effect. Always buy tuna when it's on sale because you're getting the same thing that you'll want next month but for potentially half the price. Sure, when the markets go down, the investments you've already accumulated may temporarily be less valuable. But the investments you'll be buying in the near future have just become significantly cheaper, almost as if they're on sale, allowing you to buy bigger stakes of those companies or properties for the same dollar amount. Now, I agree, it'd be awesome if we were able to avoid the part of the prices going down. But this is virtually impossible as markets in the short term are unpredictable. And there's a lot smarter people out there who can't get this right. So it's very hard for us to do it. The great thing is that markets over the long term are very predictable. Markets generally go up over the long term. And if you actually look at any investment asset class over the long term, the line is always pointing upwards or pointing down if you look to the left. Now, this is how you can really capitalize on opportunities to accelerate your wealth creation. The greatest way to reduce risk is to invest regularly and for the long term. Now, as millennials, one thing we have is time. As long as you don't need the funds in the short term, you don't need to worry at all. With a proper strategy, you will have set funds aside for your short-term needs anyway. So make your stress levels easier and stop looking at your portfolio returns. This is why we are actually hoping for a bear market soon. The earlier you can get a bear market, the better in your investing career, because then we have the opportunity to capitalize on the eighth wonder of the world, which is compound interest. So stop being fearful, start investing. Yes, we're at a high point and there's volatility, but don't be fearful. The earlier you can start investing, the greater you're going to be making money for your long term.